Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
India's economic architects, together on one powerful stage, from Nitin Gadkari to Arvind Panagaria and Montek Singh Ahluwalia, visionaries who are shaping India's future, all debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook: finance, roads, reforms, disinvestment. Nothing is off the table. The inside views, uncensored. Only at Adani Business Today, India at 100, 8th August 2025, Shangri-La Eros, New Delhi.
Welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the trading setup and the market strategies you need to follow for this fresh and new trading session, as well as for the following week as well. Remember, yesterday we did end higher in trade above 24,720 odd mark, and that was after 2 days of a losing streak that we saw. Remember, the markets have already had a 5-week of a sell-off in action as well. The longest losing streak in the last 1.5 to 2 years point of view too. Now, in this week, we started off well, but the question remains whether we will be able to sustain the momentum given what's really happening on the global front as well as on the domestic front as well. There are many moving parts that we need to track as well. Look at what's happening in the US. The benchmark indices on the Wall Street staged a rebound again, and a little more from Friday's sell-off as dip buyers returned to the market. Participants shifted focus to the strong earnings that have been reported in the US so far. So the Dow was up by 1.3%, S&P 500 1.5% higher, Nasdaq also inched by close up to 2% up in trade, and of course the markets are building in an expectation of a Fed rate cut in September. Following this, the US 10-year yield slipped below 4.2%. Trump also threatened higher tariffs on India, and that's going to be a talking point now for the Indian equity markets today. Remember, Donald Trump has said that India has been consistently buying Russian oil, and that US president has accused India of profiting from Russia's war in Ukraine by purchasing large quantities of Russia's oil and reselling it on the global market front as well. And Donald Trump has therefore said that he will substantially increase the tariffs on Indian goods entering the US in this response now. Now, what has happened is that the oil markets and the oil prices have steadied after a 3-day drop. Investors are now weighing the risks to the Russian supplies, with US President President now stepping up his threat to penalize India for buying Moscow's crude oil as well. The Brent crude oil prices were trading below $69 a barrel after shedding more than 6% over the prior 3 sessions. The WTI crude was near about $66 a barrel as well. Following this, the Asian markets have also started off on a positive footing. We'll have to see how it pans out in trade. Of course, there will be news flows that will be grappling on our attention. Following this, the GIFT Nifty trend that was initially showing a sharp downtick and a gap down opening has kind of erased some of those sharp declines, and we are now looking at a muted start for the Indian equity markets as well. But it's now time to welcome our guest on board to really help us understand how do we really look at this fresh and new edition of the markets. Mr. Dharmesh Kant is joining in from Chola Investments, and he's going to be sharing with us his viewpoints as far as the markets are concerned for this fresh and new week. Warm welcome to you, Dharmesh ji, and thank you so much for taking the time out. Dharmesh ji, this fresh round of threat coming in from Donald Trump, saying that yes, we've already put a 25% tariff on you, and because India is an ally of Russia and it continues to buy oil from Russia and is profiting from it, we are going to be penalizing you. He had earlier indicated 100% additional tariff on all those allies of Russia, and now he's stepping up the threats even more, even though we have seen that India has responded to this threat and said that, we are not going to bow down with these, threats that are coming in. How would you look at it?
Yeah, good morning, Sakshi. I think it's getting complicated. And the best part was the response by the Indian government. That response was very strong. And see, from country's perspective, if you look at it, around 2.5% is only the trade which happens with of the GDP with the US. The problem is for the markets because that 2.5% almost includes all the listed companies into play. So be it, auto ancillary, textile division, some pharmaceutical play, and the other related industries to that is, tied up in this tug of war which is happening between the two countries. So those are the sectors which are likely to be impacted, negatively, and this will be prolonged. I don't think it's going to settle very fast, very soon. But apart from that, I mean, the other things play fine for the country. The second factor, which I think which can dent a bit of a negativity, is on the FIIs, the money which is flowing into India by the foreign investors. Because most of these foreign investors are primarily from the Western world. Either they are from Europe or they are from the US. The money may be routed to Singapore and Dubai, kind of a destination. But essentially, these are the money of the Western geography of the world which is coming into India. So there can be some challenges out there. And third factor is US itself has been doing exceedingly well on the earnings front. So I was just reading the Bloomberg consensus estimate yesterday evening. So the latest update has been 82% of the companies have reported better than consensus earning estimate. The GDP of Q2 was far better than what the expectation was. And small, push and pull between unemployment rate or inflation here and there will keep on happening, and they have pressurized their central bank very well. So Fed rate cut is coming. So US economy continues to do well. Our broader economy continues to do well. But because of this tariff thing, there will be few sectors and pockets which are to be negatively impacted, and namely they are EMS and the likes into play. So that we have to see how it turns out. My only worry is on the foreign flows which has been coming into India. Though last year it was a difficult kind of a scenario, this year again it's likely to pan out a difficult way. So you have to be a bit careful on the market. It's likely to be range bound with push and pulls happening.
It is likely to be range bound with all these complications rising. Remember, viewers, I just wanted to highlight for all of you that MEA has responded, that's the Ministry of External Affairs, has responded to these tariff threats coming in from Donald Trump, saying that targeting of India is unjustified and unreasonable. Now, India began importing from Russia because the traditional supplies were diverted to Europe. US actively has encouraged such imports by India for strengthening the global energy market stability. Now, the very nations criticizing India themselves indulging in trade with Russia. Now, we've also said that EU, with a bilateral trade of euros 67.5 billion in goods with Russia, can be also taken into record. Of course, we are also seeing a record LNG import of 16.5 million tons within the European Union as well. Even US imports uranium from hexafluoride for its nuclear industry, palladium for its EV industry, fertilizers as well as chemicals from Russia themselves. So how are they criticizing India? Now, they're also saying that India's exports to the US comprise of just 2.1% of India's GDP, and uncertainty and the second order effects can actually continue to impact sentiment. Those are the statements that are coming in from the MEA, and remains to be seen what comes in as a response to this, response from India as well. That's one aspect. We will continue to monitor what happens on the tariff front. The other key aspect, Dharmesh ji, is what will the RBI do in the wake of, these rising tariff threats. That's the big policy outcome that we are waiting to see from Indian Central Bank. Do you think there has to be some more, rate cuts that have to come in despite the front loading of 50 basis points that came in last time around? Or do you think the RBI is likely to hold fire this time around as well? What is it that you will be looking out from the RBI's commentary also this time around?
So, Sakshi, I think the commentary would be very, benign kind of a commentary with all the positive aspects being outlined. The inflation trajectory is already down, so that's the comfort zone where the IBA is setting on. As far as, further rate cut is concerned, I think this time around they won't be doing that. Though they have enough elbow room, because now it's very likely that the US will go ahead and cut the rate cut in the month of September. So that one factor will give them the elbow room. The second factor is the low inflation trajectory, and the better monsoons will give them elbow room. But to my mind, I think that they will hold the rate cut primarily to keep the arbitrage between interest rate differentials between US and India still strong, to keep the currency stable. We have already seen a currency depreciation of 1.5% this year. And in light of all these tariff threats happening, there is a likely chance that Indian rupee may depreciate further, which beyond a point would not be desirable for the RBI. So to have that angle in mind, I think they will go with the status quo. Otherwise, everything will be very positive and, punky dory to hear with.
Okay, got that. So that's the RBI expectation there. Dharmesh, what about earnings? How are you assessing the earnings that have come in thus far for the Indian companies? So far there hasn't been a very enthusiastic number or very encouraging number from any key pocket. But have there been any outperformers for you in this Q1 earnings that have been reported thus far?
Yeah. So broadly, the earnings were, very tepid kind of earnings. This time around, even the operating income did not rise. It was always the other income which did the heavy lifting for most of the companies. And 5.5% kind of 422 companies which we have, aggregated the earnings of. We saw 5.5% kind of operating profit growth. And the alarming factor was 33% of them reported negative operating profit. So that was one key concern area. The second was most of the management commentaries, the con calls which we have been hearing to, are like neutral to very cautiously optimistic kind of a call, where they are holding their guns before, committing anything. So they themselves are a bit, not so gung-ho about the future outlook in near to medium term. So that's the second big negative which has come out. But there has been outliers, and the two sectors which was, very robust set of earnings. One was the chemical space, but now with all this tariff thing happening, that can come into a question mark, because most of the specialty chemicals have been supplied either to Europe or US. But one sector which is very almost a clear winner out of this was the renewable energy space. So most of the renewable energy companies reported with a very strong set of numbers and a very good outlook. And there, I think, we have initiating coverage on Wari Energies, which tends to benefit from whichever combination permutation you put into play, because they already have a 1.6 gigawatt facility in the US for solar modules, and they are expanding it by 1.64, so 3.2 would be the total capacity in the US. So US part of orders can be serviced from there. At the same time, India centric, they already have 5.4 gigawatt of cell manufacturing capacity and around 14 gigawatt of a solar module. So this ALMM, where DCR content, that is domestic content, has to be from manufactured in India for even for cells. That would be taken care of, and they are expanding it to almost 15 gigawatt of cell capacity and 10 gigawatt of wafer capacity backward integration. So this is the largest player in India. Going by all the run rate, I think this time, as per management, has guided around 5,500 crores of EBITDA, which they will do in all our probability. It looks like they are going to achieve that, which will be a significant jump from the previous earning. And the year ahead also, we are expecting 30% kind of a jump. So I think any declines out there on any disturbing news flow, you can buy into that and build on for a 3,800 kind of a target price in the medium term. So that is one space, renewable energy space, where NTPC Green is the other bet. Investors can have their own choice, which looks a very clear set of play. And one more area which we have been saying time and again is the defense. So any decline or correction in defense stock because of market correction, you should look into. And the top pick out there is HAL, BEL.
Absolutely. We'll just quickly take a look at how the markets have settled in the pre-open trade, viewers. Absolutely flat just was the indication from Gift Nifty was, and that's what we are looking at. 24,720, just about a 2 point of a downtick on the Nifty. Seems like it's going to be the metals that will continue to shine bright and take away, continue to move forward from yesterday's move. Real estate, broader markets could also be in focus. Autos could also be driving higher, but IT and banks could be probably on the back foot as of now, is what is getting indicated. Although IndusInd Bank is going to be in focus with new management changes that are taking place at the helm. You're also looking at some commodity plays, Hindalco, Ultratech Cement. Those are the names that could be hovering higher in trade as well in the kind of Nifty movers list as well. We could also be looking at some of the PSU names that could be in focus, and of course the earnings reactions that could be coming in as well will also be very important to look at. So let's start off by discussing all of these moving factors in terms of key sectors and stocks with Dharmeshji now. Dharmeshji, IndusInd Bank, let's start off with that one now. Want to discuss with you, after all of these recent volatile moves have actually already panned out, the company is now looking at a forward-looking kind of way or a path where they would want to undo what's already happened at the bank and probably look forward and catapult the bank even higher with the new management changes that are coming into focus. How are you looking at these new changes with respect to IndusInd Bank? Does it give you any confidence of now taking a fresh look at the bank?
See, I mean, as far as the financial health of the bank is concerned, I think 1 year will be lost. Almost 1, 2 quarters they have already lost it. And going forward also, at least with all this new management changes happening, and after they assess the kind of damage which is there and the strategy which has to be put in place, till that time they would be holding on to the growth trajectory. So we have seen last quarter numbers also there was a decline in every aspect, whether it is advances growth or deposit growth or even the provisioning was far higher. So my only worry was that the type of provisioning they have been increasing. Though from estimate you can always compare gets are better than the estimates, but the fact remains that optically it was a higher kind of a provisioning. That does suggest there is some more pain to go. So that will keep the upsides into check. But given the fact that earlier bank like Yes Bank we have seen, it has bounced back and it's totally restructured and now back on the path of a better growth. So same with IndusInd Bank, though here the damage is not that bad as it was in the case of Yes Bank. So it was a slight damage. I think for investors who are looking at say a period of 2 years kind of a time frame, this is a right time to get into IndusInd Bank, be invested, be very clear that you can still have 5-10% kind of a slide or some more news flow coming in. But I don't think it's the bank is going to slide below that. So a right pricing it seems around 800, 750 to 850 is a right zone, and it's trading at less than its book value. So after that, when things stabilize, decent upside can be seen in the bank. But as of now, it's very hard to comment and that how soon the growth trajectory will become for IndusInd Bank.
Absolutely. Dharmeshi, let's also focus on a bit of the kind of earnings that are coming in for specifically when we talk about the IT pack. Most of the IT earnings are now out. What have you deciphered after the IT earnings that have come in? What is it that will, help you take a decision of what is the course to be followed for your clients?
See, IT we have been consciously avoiding as far as software plays are there, both as a software as a service or as a platform. But those two plays we have been avoiding for last 1.5 years. In between, there was a run up, then again there has been a meltdown, and I don't think things are getting to be better for IT companies. This difficulty here definitely for next 6 months or so, and this has been carrying forward every 6 months. So every year the commentary has been a standard. The second half is likely to be better, but it has not turned out to be better till now. And I don't think so. The CEO's rate cut and all is going to help IT companies because there's a structural shift completely in the IT companies. Even Indian IT companies are adopting AIs and they are laying off people. So this transition will take at least 1 more year, and then how the market is placed, how the competition is placed, one has to look at that. But within the IT companies, anything to do with engineering, research and development, there are plays. However, most of these plays are related to, EV vehicles, auto ancillary kind of activity where the entire modeling and the designing structural, be it powertrain and the chassis design, and anything to do with electronics and the software defined vehicles kind of technologies there. They are going through their own down phase, but I think this is a time one should be invested into that because Europe has done the rate cut, UK has done, US is doing, and eventually the economy is going to stabilize and go forward. And then the pent up push up of all the new launches will happen. So there, I think Tata Technologies looks pretty interesting at current levels. You can still expect a downside for say 5-10%. And I'm saying this having regard to all the tariff related things which are plaguing the auto ancillary space. So eventually, because these are technology companies, they will have their way out. They are not component manufacturers. They are basically deals into software. It's a service rather than component manufacturing. So there's a distinction between them. So those basket one can look at. Other than that, IT to my mind is still not a clear buy.
Dharmeshi, another space that's also grappling with a lot of changes at the management is PNB Housing Finance. After the recent exit of the MD and CEO, Mr. Girish Kauski, Goldman Sachs has come out with a report and it says that they still maintain a buy rating and a target price of 1386 because they believe the derating is actually overdone and the recent fall actually presents an opportunity to take a fresh entry looking at the consistent performance that the housing finance company has actually been showing and displaying over the last few quarters. How would you look at the PNB housing counter at this point? Is this on your list as well?
Definitely, yes. In fact, yeah, housing finance as a space is looking very attractive in the affordable segment. And PNB Housing Finance has a history of accidents, unfortunately. And this time again, the accident happened. To my mind, it was a big surprise because there was nothing wrong fundamentally with the running of the business of PNB Housing Finance. It was more to do with a person exiting, and then this kind of a fall happened. So sometimes market surprises you on the negative side. I think this is a good opportunity to buy it because things have been moving up fine and they will find a suitable replacement as well. The manner in which it happened, I think that is what caused the big fall into the stock price. So valuation wise, it looks very comfortable. And again, this is, I mean, investment play. The moment, names are announced and approved by RBIs, you will see the catch up happening fast. So my own sense is a person exit if it gives you a derating kind of a scenario and business is doing fine. Tactically, it's a very right time to invest into such kind of a companies where there is no business related worry. It's more of a person related thing. We have seen earlier as well. I mean, ICICI Bank is a classic example where Mr. KV Kamath left and then the transition was happening. Things followed fine for the bank and it's the best performing bank today in the entire private sector banking space. So that is what history, makes us learn about it.
All right, markets started on the back foot, viewers. 24,697 is what we are seeing at this point in time. Let me quickly look at the top movers. IndusInd Bank tops the charts, 2% higher at 821. Coal India follows, 1.2% higher. You can see Jio Financial Services, Bharti Airtel, SBI as among those top movers. Among the sectors, the broader markets are actually ticking higher and doing better than the benchmark indices, with the small caps up by 0.5% today. You can also see the PSU banks also doing well, 0.3% higher. Metal slightly up again, 0.3% up. Consumer durables, pharma, mid caps and infra. These are the pockets that are higher. But IT continues to draw even lower. You can see about a 0.2% lower tick on this one. Autos also drive in the slower lane. Oil and gas, financial services. These are all the pockets that are actually struggling right at the beginning of the session right now. Which are the top laggards on the Nifty? Infosys, Reliance Industries, M&M, SBI Life, Tech Mahindra. These are the stocks that are dragging at this point. Let me look at the broader markets. Anything interesting here? Godfrey Phillips is moving up 6.5% higher. Azad Engineering, earnings play there, 6% up. Indo Solar is higher in trade. You can see Ujas Energy, names like even Premier Explosives is also higher by about 4-5 odd percent. And Gold from the gems and jewelry space is higher in trade. Those are some of the names that are up, but which is the pocket that is still struggling in the Nifty 500 basket. Triveni Turbine is down. You can see even ADAG, all the stocks are actually down. Reliance Power, Reliance Infra, Reliance Home Finance, all of them are struggling right now. You can also look at TBO Tech, that's declining. Even some textile space stocks that are actually feeling the pressure. Remember, the tariff talk is keeping these sentiments low, across the space. Gokaldas Exports, Kitex Garments, these are the stocks that are actually seeing some pressure build up right in the morning trade. Let me quickly welcome Mr. Arpit Beriwal, who's the analyst for derivatives at Wealth Management, Motilal Oswal Financial Services, joining in. Arpit, warm welcome. Good morning to you. How do you see the opening for Tuesday's trade?
Very good morning to all. So if you talk about Nifty, Bank Nifty, broadly, if you see yesterday, we have seen good recovery from the lower levels, particularly about Nifty and the broader market. But where the real pain over here has been the Bank Nifty, where relatively yesterday also, when we're seeing good recovery in Nifty and the broader market, Bank Nifty was still sluggish and underperforming. So I think talking about Nifty as a whole, overall on the weekly time frame, it is still forming lower as lower structure. So that clearly indicates the upside is capped. But at the same time, Nifty is near its major support zone, that is around 24,450 to 24,500 zones. And yesterday we've seen good recovery from the low levels. So Nifty, our view is that index is likely to be in a range between 24,500 to 24,800 levels. Any closing above 24,800 would change the decisive stance for the positive bias. For Bank Nifty, we talk about Bank Nifty has been hovering below its 50 DEMA, below 56,000 levels, and for Bank Nifty 55,750 would be a key level to watch out for. Till it closes below 55,750, upside would be capped, and more or less specific banking actions stocks could be seen within this index.
Okay, fair point. Any two stocks that you'd like to take a position either on the buy or the sell side right at the beginning of the trade, Arpit?
Yeah, so I think first would be from the financial pack itself, the GeoFin. So if we talk about overall structure of GeoFin, it has been very strong on the monthly scale. It has given a range breakout above 323 to 25 levels on the weekly scale. After a negation of lower highs, it has formed a strong bullish candle. And today also have seen a good opening. So I think slowly, steadily, the stock can head towards 350, 355 levels with major support around 322. Second would be from the auto pack. So yesterday we've seen a very strong recovery in the entire auto index, and within that, Hero MotoCorp has given a classical range breakout on the weekly scale after almost 12 weeks, with strong bullish candle yesterday formed with good decent surge in volumes. A range breakout above 44.50 will definitely act as a major support, and I think from here on definitely 5 to 7% up move can be seen towards 47.50, 48.50 levels going forward. So Hero MotoCorp and Geo Financial would be a top pick for going forward.
Okay, got that. We'll definitely keep an eye out in it. Let me take even Dharmeshji's view on the auto space and on Hero Moto. Fresh move that has begun after the sales numbers that also came in. What is your fresh approach on the auto pack, sir?
Sakshi, about Hero MotoCorp, I mean, number of times I have retracted on your show as well that it's a good bike and things are picking up as far as, entry-level bike sales are concerned. And this time they have done even export sales so much better. So 21% kind of a growth number is heartening on the profitability side for Hero MotoCorp. Going forward, I think this traction of like 4,70,000 to 5,50,000 kind of a per month bike sales is likely to be there. So, and we are now walking into the festive season with a lower interest rate and better rural India income coming to the place. So, fundamentally, it looks very strong. And if you position this against the likes of the peer group like Bajaj Auto, Eicher, or TVS Motor, the valuations are quite reasonable. It's trading at 19 times P multiple 1 year forward. So we continue to recommend buy on Hero MotoCorp. I mean, the upside price targets can be earlier we were targeting for 45.50. Now I think 5,000, 5,100 can be a upside target, 10% more kind of a move out up from here. The other stock which I would like to highlight here from the auto space is Mahindra and Mahindra. So all its verticals, be it SUV segment, farm equipment, everything is firing well. And the new launches has been citing good amount of inquiries and order booking out there. So, but that is one more company which one should be looking into. Fundamentally, again, every vector is moving fine for M&M, and the upside target again is likely to be near to around 34, 3,500 in the medium term, having the festive season into the mind. So these are two companies which we have been banking on.
Okay, got that. Okay, just wanted to mark out for all our viewers, there's been a large trade that's taken place for Paytm, 1.86 crore shares. That's 2.9% of equity that's exchanged hand via a block deal. That's something that investors can definitely keep an eye out on as well. We'll focus on this stock a little bit later. But just before I have to thank Dharmeshji, I have to ask you a broader question. We've discussed a lot of macro and micro news and the kind of impact that we are seeing on the markets. I still wanted to understand for a broader audiences from you, what is the best way of investing in equities in the Indian markets amidst all this global uncertainty? What is your key advice to them?
The best advice actually is to go SIP kind of a mode, and don't pick up a sector or thematic kind of a bet if you're going doing it through a mutual fund. Keep it a broad, large cap, mid cap kind of a sector fund rather than a sector specific fund. So this is the only way over a long period of time, because when we talk about investing, we are talking about 3 to 5 years. Thematic or sector plays are there for only 1.5 to 2 years. So there's no point, getting stuck out there on a longer term or longer time period kind of a scale. So SIP is the only way. Every decline, the way I mean, I recommend is if the index corrects by 10%, you should double your SIP. So keep that elbow room in place and keep on riding the highs with the kind of SIP you are doing on a monthly basis. Only in the event of a big correction, you should be thinking of doubling the SIP for that particular month. So this is what we have been recommending. I mean, that's the solid recommendation. And don't be sector specific kind of fund. Play it on a general large cap, mid cap kind of mutual fund schemes.
Okay, fair point. All right, Dharmeshji, thank you so much for
Thank you.
sparing your time for all of us and our viewers. Always a pleasure to host you. Thank you so much.
Thank you.
All right, viewers, we'll continue our conversation with Arpit now. And Arpit, meanwhile, you must have spotted some of the moving parts. Broader markets throwing you some opportunities right now, would you say?
So definitely, Sakshi, and I've been seeing this time the market has been quite weird. In fact, a very different correlation has been seen. Till last week, we have seen broad-based selling across the market. Yesterday, we've seen good pullback in the broader market. But one concern thing has been the Nifty and the Bank Nifty. If you see, though we have seen some recovery in the Nifty yesterday, but still not the major recovery we have seen in the banking index. So definitely looking at the chart structure wise on the bigger time frame, on the monthly and the weekly setup wise, definitely Nifty and Bank Nifty has stance that it's likely to be in a range. Having said that, but there are definitely a lot of action in the selective pockets, such as, for example, if you talk about the overall AMC pack or the capital market theme. So AMCs have been very strong. And if you look at the chart structure, for example, HDFC AMC, a classical uptrend where the market has corrected in last couple of days, but HDFC AMC, if you look at the chart structure on the monthly and the weekly setup, a very strong uptrend, and definitely going forward also, our sense is that AMCs are definitely likely to outperform from a next 3 to 6 months perspective. So I think we have to focus on the selective sectors, and within that, AMC would be a preferred pick. So look at the chart structure, HDFC AMC, definitely the stock can head towards 5,800, 6,000 levels going forward. So this would be one sector that to watch out for. And second would be if you talk about the overall the cable and the wire space. So within that, if you talk about Polycab and KEI industries, if we first talk about Polycab, so relatively Polycab has been also a very steady move on the weekly time frame. So when we have seen broader market correction, it was holding well. And yesterday we have seen good recovery from the lower levels from 6,750 levels. And I think chart setup wise definitely indicates that definitely we can see a move towards 7,100, 7,200 levels. So along with that, Polycab, second would be the KEI industries. So I think within the cords and cable space, KEI and Polycab definitely looks good. And you have to be very, very specific, stock specific action you have to see as per the earnings play. So going forward, I think it would be a more sector and stock specific rather than a broad based approach going forward for the markets.
Okay, fair point. I hope this is also given a broad understanding to all our viewers as well. Let me just quickly look at some of the other pockets then, to find out what else is really ticking. Within the capital market space, there are some stocks that are actually doing well. Nuvama is up in trade in the FNO space. And there is some other movement also across the space as well. We are inching closer to NSDL IPO getting listed. What exactly is your thought process in the capital market story? What is looking good? What would you, work well with amidst the trade?
So actually, if we see from the holistic view, capital market as a theme, it's quite a big theme. And if we look at it, we can sub-segment into 3 to 4 categories. One would be the AMCs, second would be the exchanges, and third would be the depositories and the intermediaries. And we have to select like a kind of a basket for this capital market theme because generally, such stocks are generally, if we see in the last Feb and March correction, also the stock has corrected sharply across the board. And but however, we've seen good recovery also. So I think a sense that for a capital market to play the theme, we have to choose a basket of 3 to 4 counters for next 6 months to 1 year perspective because the overall stance is positive. And within that, from the AMCs, I think the HDFC AMC would be a preferred pick going forward, along with the exchanges as the sole listed that will be a CDSL that has to go to, seen correction from the higher levels. Now it's back to its previous support zone. So the second pick would be CDSL that looks very strong. Third, as we all know about the exchange that is the theme is the MCX. So definitely after a stupendous rally of almost 6,000 to almost 9,000 levels from last couple of weeks, the stock has been entered in corrective mode. But generally, this all sense is a very good buying opportunity if your vision is for at least for next 6 months to 1 year perspective. So I think HDFC AMC, CDSL, and MCX would be a kind of a basket that we can play with along with that one more counter that is there on our is KFin Tech. So KFin also we have seen good correction from 1400 levels towards 1100 levels, and now it is back to its major support zone. So I think one can create a basket of this four stocks going forward, and definitely they can deploy some amounts going forward with a view of 6 months to 1 year horizon. And definitely this theme is likely to pick up once the market recovers.
Okay, fair point. First 15 minutes of a candle is formed and you can see 24,673 on the Nifty right now, viewers. There's a 49 point of a dip. We have seen the dip getting, deepening at this point in time for the Nifty. But let's see how this really pans out in trade. Barring the PSU banks, consumer durables, private banks, metals, pharma, rest all of the sectors have actually come under some pressure. With oil and gas now dropping about 0.6, 0.7% in trade. Remember, there is this entire fear about Russian supplies and what that does to the, crude oil prices, and therefore what happens to the supplies for Indian companies. All of that is in focus, and that's why you can see some sentiment cut there. FMCG, financial services, IT continue to reel under pressure as well at this point. After the first 15 minutes, what's the sense that you're getting? Just about 1 day of a bright move we had yesterday. Seems like again today the markets are struggling.
Generally, whenever the market is in a trending phase, so from last couple of 3 to 4 weeks, market what has they done? Market has corrected, some bounce back level has been seen, and then for after that, for next couple of days, market has again slide down. So if you look at the weekly structure of Nifty, from last 5 weeks, it is forming lower as low. That clearly indicates that the upside is capped. And if you look at the daily structure, so on the immediate basis, a sense that 24,800, that was the initial major support zone that we used to talk about. Now going forward, 24,750, 24,800 would be a key hurdle zone, and till Nifty doesn't close above 24,750, 24,800 levels, there is very slight chances that we're going to see meaningful reversal. But at the same time, Nifty is near its support zone, so I sense that 24,800 on closing basis would definitely change our stance for the positive bias. Till that time, Nifty is likely to be in a range between 24,500 to 24,750 zones going forward.
Okay, let me quickly understand on IEX, what is your thought process on this stock? Why? Because the stock is in focus. It has seen a strong volume growth in the month of July, but the prices have continued to fall over the last couple of months. You can see the day ahead market has registered a 9% increase in the volume to 5,510 MU, while the real time electricity market has seen a sharp 53% jump to 5,109 MU as well. And despite the surge in volumes, the prices have actually been continuously trending downward as well for the stock. In fact, what we've also seen is that the stock of IEX has fallen about 30% in the last 1 month alone in a reaction to the negative development that took place with regards to the market coupling norms, which have been a major overhang on the stock as well. Now, the Central Electricity Regulatory Commission recently approved the implementation of market coupling norms with day ahead market in accordance with the power market regulations of 2021 starting January of 2026, and that's been the key cause of the decline that we've seen, although the volumes continue to inch higher. What is your own thought process on IEX? Are you advising people to stay away from this news-bound uncertain counter at this point in time, or do you think for the long-term investors this may be a better opportunity to probably enter in the hindsight?
So Sakshi, if we talk about from an investment perspective and look at the monthly chart from last almost 3 years, the stock has seen in a broader range between 125 to 185, 200 levels from last almost 3 years. And if you look at the recent structure of last couple of weeks, definitely you've seen a panic selling across the counter. From 190 levels, the stock has corrected towards 133 levels. Historically, what we have seen, generally such counters really takes a lot of time to recover from the levels. And from an investment perspective also, generally we tend to see the bigger time frame structure. So look at the structure wise, definitely it's better to avoid such counter from a long term perspective. If you want to play from a trading perspective, that's a different story, but generally we would avoid. And our sense is that any bounce, if we see going forward towards 145, 150 levels, so our suggestion would be better to exit on bounce. And because there are much more better counters across other sectors that we can go for, so our sense would be that better to avoid this counter from a medium to long term perspective on any investment basis.
Okay, fair point. Noted that too. Let me also just quickly look at some of the other stocks that we can then focus on. Let me pull out the small cap basket. That's looking good at this point. The movement is strong. You can see Godfrey Phillips up by almost 9%, followed by Nuvama that we've discussed. Chambal Fertilizers is higher. Keynes Technologies, Dr. Lal Path Labs, Jupiter Wagon, CESE, IKS. These are all the stocks that are moving higher in trade. What's the fresh trigger on Godfrey Phillips? Do you see this counter carrying on the momentum? Should one look at it?
So if you talk about this counter, it has been a stupendous uptrend from last almost 4 to 5 months. The stock corrected from 8,500 to 5,500, but then we have seen a one-way vertical rally from last almost 5 to 6 months. If I look at the weekly setup wise, definitely for last almost 7 to 8 weeks, the stock was consolidating between 8,200 to 9,200, and today, if you see, it has seen a gap up with good volumes. It is holding well. A consolidation breakout on the cards above 9,400 levels. So I think from here on, definitely we can see a good uptick of 5 to 10% also going forward with a view of 1 to 2 months perspective. So I think definitely it could be a buy with support of around 9,400. Slowly, slowly we can see 5-digit figure that is 10,000 and 10,500 levels on the cards going forward for this counter.
Okay, got that. Let me just quickly look at some of the other, key ideas that we could be discussing with Arpit. And, one of the key pockets that I wanted to discuss is PSU banks, and how are you looking at the fresh move on this basket? Of course, in the recent 2 to 3 months kind of a viewpoint, markets have largely been supported by the large private sector banks. It was HDFC and ICICI that led the recovery in the Nifty bank and therefore supported the sentiments for the Nifty as well. But largely PSU banks stayed on the back foot. Slow but gradual move has actually started about a month ago. Let's find out whether this has more steam. PSU banks for you, Arpit, how are you looking at it?
Sakshi, if we talk about the overall PSU space, a very interesting study we have observed from last couple of years. Generally, this sector is a good buy when the index is corrected from last couple of days. So it's not like a breakout counter, but it's from where the stocks changes from the support levels and takes support and turn from the support levels. So now, interestingly, if you talk at the major counters from the PSU basket, that is SBI, Indian Bank, and if you talk about Bank of Baroda, so from last 7 to 8 days, all stocks has been on a corrective phase, and now it's near its major support zone. One more key thing that I would like to highlight is on the 8th of August, we have SBI result. So definitely RBI policy is also in action, and ahead of SBI result, definitely PSUs, we can play a bounce back move within the PSU. So within that, two counters that looks relatively better. That is, one is SBI because it's near its major support zone around 200 levels with major support around 790. So we can see some momentum ahead of its earnings season towards 815, 820 levels. So SBI could be a preferred pick. Along with that, second is a trending counter, that is Indian Bank. Indian Bank, where the PSU stocks are at 52-week mix, or it's still not at life high territory. Indian Bank is trading at life high territories in a broader range between 600 to 660 levels. Yesterday also have seen good recovery from the lower levels, and I think it can again head back towards 660, 670 levels. So SBI and Indian Bank would be a preferred pick from the PSU space. Having said that, the momentum could be short-lived because broadly it's trading in a range. So accordingly, traders can play within this range. SBI, the range would be 790 to 820 levels. Indian Bank, the range would be 630 to 660 levels.
Okay, fair point. One more group that was catching my attention yet again is the Anil Ambani group of companies. Just wanted to get all the viewers to get a fresh perspective on this one again. Last couple of months, we have focused time and again on these stocks. Why? Because at least from the last 6 or 9 odd months, there was a consistent move on some of the stocks of the Anil Ambani group. Case in point, Reliance Power, case in point, Reliance Infra. These stocks have been consistently moving over the last 1 year, 6 months more so. And you know, in the last 1 month, there has been a reversal of the kind of move that we are seeing. And the key reason for that is that recently the Enforcement Directorate tightened their grip on Anil Ambani-led Reliance Group for the 17,000 crore rupee of loan fraud case, where Anil Ambani has been summoned, executives have been questioned, one arrest has already been made, and these have been the key reasons. Again today, most of these stocks are actually trending lower with a 5% cut, and this has been the case over the last few sessions for most of these stocks as well. So what is it that investors must be doing? Now, Arpit, we do know over the last 6 months, many investors have been looking at positive news flow around these companies of being debt free, of looking at more deals that are being signed, going big on the solar space, for instance, as probably something that was an indicative of a turnaround that could take place. And many retail investors have also tried to take the benefit of this upward rally and entered, and now they are feeling stuck because of many days of lower circuits that are coming in. What is it that is your advice to investors of these groups?
So, Sakshi, if we see overall from a holistic perspective, generally we advise to all our clients and to all our players also. Generally, such counters, particular such kind of companies are relatively high volatile. And if you've seen the up move and the down move, definitely are very swift. If we see historically from last 8 to 10 years graph of all these counters, so generally our sense is that whenever we go from an investment perspective, we generally allocate and we suggest our clients that if you are deploying 100 rupees, so definitely 80 to 85 rupees would be in a safe trending counters and the sectors that you understand and that are strong from a bigger trend perspective, rather than last 10 to 15%. If you want to really play on that high risky bets that you can play it out. But generally, if you look at the chart setup of all this counter, a very strong counter like you seen from the lower levels. But as you rightly mentioned, from last couple of weeks, the stock is in downtrend. So I sense that any generally bounces, generally it's very short-lived. And our suggestion would that if you want to build, definitely just deploy 4 to 5% of your total portfolio. And the first case, it's better to avoid such counters at the first place, because if you look at the monthly and the bigger time frame structure, if you get onto the wrong entry point, it's very difficult to take an exit. So our first point of caution would be better to avoid such counters. And even if you have stuck your positions in this thing, it's better to exit on some bounces, because definitely some bounce would be seen as as some market gets recover. But I sense that better to refrain from this companies as a sector or as a theme wise, and better to stick to more quality companies going forward.
Absolutely. We were discussing the banking space, and the one stock that again caught my attention there is Jammu and Kashmir Bank, Arpit. Why am I talking about this stock? Today is the 6th anniversary of Article 370 abrogation. And one of the key stocks that we always talk about when Jammu and Kashmir is in focus is the Jammu and Kashmir Bank. Recently the company also came out with the earnings as well, and we were speaking to the management who seems very confident about, continuously looking at reduction in the NPAs as well as improving the loan account as well. We have actually seen that Jammu and Kashmir Bank, which reported a loss of as much as 1139 odd crore rupees back in the fiscal year 2019-2020 during the time of COVID, to a profit of more than 1700 crores in the last year, that's 2023-2024, and continues to show us some strength as well. Now, of course, when we look at the stock price performance also of Jammu and Kashmir over the last, say, 5 to 6 years, you will consistently see that the kind of movement that we've seen is upwards of 540-550% odd as well. So the bank has improved fundamentally. The stock price has rewarded investors as well over the last 5-6 year period, and we have seen how the stock has performed in this interim period. Arpit, what would your thoughts be on J&K Bank? We have seen, remarkable up move from what has been a low-lying stock back in 2020 to now a 3-digit stock, and continues to show promise within the banking space.
So actually, if we talk about Jammu and Kashmir Bank, if I was looking at the monthly structure, so definitely we have seen good rally in the year 2023 to almost 24 from 30 odd levels to 140 levels, and post that the stock is corrected in a corrective phase from last almost in the monthly side. If we see the stock is trading in a range between 95 to 120 levels, so definitely the base of the stock has shifted higher from 75 to the new basis around 90-95 levels. But look at the immediate chart structure, definitely the stock is still trading in a range between 100 to 115 levels. So now the stock is back to its support zone. So definitely the risk reward is favorable from a long perspective, but as of now, there's no major reversal on the charts. So we'll wait for the closing above 105. A closing above 105 would definitely helps us to see some bounce in this counter towards 110, 1114 levels. So I think 105 would be a key level to watch out for, with major support around 95, 98 for an upside move towards 111, 115 levels.
Okay, fair point. So that's the J&K Bank counter for you. Let me quickly look at what else is ticking in the markets. Viewers, more and more sectors have come onto the into the bear grip right now. You can clearly see even the small caps now ticking lower. So there is some slippage that's happening. Remember, the first half an hour of the candle is getting formed now, and there is weakness that persists. So the Nifty is down by 0.4% now. It's at the low point of the day. The small cap index that was higher by about 0.5% has given up all of those gains and is now turned red. You can also see the Nifty Bank, that's also lower, barring PSU banks. Rest all of the segments have slipped. IT is lower in trade, barring PSU banks, in fact, and media. Rest all of the pockets have all slipped. What do you make of this weakness, Arpit, after the first half an hour candle? What would you advise for traders?
So, as we also discussed, Sakshi, right from the start also, from last couple of weeks, the trend has been, we have seen a corrective move, some bounces has been seen, and again that corrective move starts. So if you look at the bigger structure, last week there was selling pressure, yesterday we've seen some bounce back move, today again we have seen some cool off from the higher levels. So the important junction for today would be on the closing basis, whether the Nifty and Bank Nifty is able to close in the positive territory, and as we discussed about levels, about 24,800 on the Nifty would be a key level for any decisive change in the stance for the positive bias. For Bank Nifty, it would be 55,750 levels for the positive bias. Having said that, stock specific action is definitely going to be seen because the earnings season is going on. So we can see selective pockets outperforming. But if we look at the bigger trend of the market, still it's shaky and still upside is capped. So it has to be very, very selective. And we have to play a blend with the long and short ideas, both for the stocks and likewise for index also.
Fair point. Okay. Let me just quickly reiterate for all our viewers what's happening on the Nifty. Remember, the breadth was much stronger in the morning trade. It's weakened now. Adani Ports, BEL, Adani Enterprises, Infosys, HDFC Bank, Cipla, they're all the top laggards right now on the Nifty. On the gainers and the losers front in the Nifty 500 basket, Triveni Turbine has lost ground. You can see Global Spirits, that's down in trade. Kitex Garments, TBO Tech. You also have names like RS Software, KPI Green Energy, Inox India. These are also down in trade within the broadest index right now. Let me just quickly also pull up the key index contributors on the downside. HDFC Bank is the key contributor among the large caps. 31 points being contributed on the downside by HDFC Bank. Reliance is contributing about 18 points to the downside on the Nifty. ICICI Bank is contributing about 11 points to the downside. Infosys is also contributing on the negative side. ITC is dragging, and some of the larger pharma players like even Sun Pharma are dragging right now. So banks, Reliance Industries, FMCG giants and pharma giants, they're all and IT giants, they're all contributing on the negative side right now. Let me quickly understand from you, Arpit, what would you do with Reliance Industries that has been sluggish for some time now?
So actually, if we talk about the structure of Reliance, if I look at the bigger time frame structure, so Reliance is near its major support zone. But if you look at the weekly setup, the stock is still forming lower highs on the weekly scale. So that clearly indicates the upside is cap going forward. From the daily basis, the stock is hovering near its 200 DEMA. So the setup wise, around 1380, 1375 would be a major support level. On the upside, 1420 is the hurdle zone. So our sense is that stock is likely to consolidate between 1380 to 1420 levels. Any decisive close above 1420 on the upside or any close above decisive closing below 1380 would set the next tone for the market for Reliance. Till then, the stock is likely to consolidate between this range of 30 to 35 points.
Okay, got that. So that's the key viewpoint that is being shared. All right, we'll leave you at that note, Arpit, for being with us in the morning edition. Let's see how it pans out. Hasn't been a very good start for the markets on a Tuesday trade. 107 points lower for the Nifty. We are at the low point, 24,616. And let's see how this really pans out in trade because the India VIX has now inched higher, now over 1% at 12 odd levels. So the volatility or the fear gauge is again indicating some fear among the investors in the current sentiment as well. Among the top movers, you still have IndusInd Bank, Grasim, Axis Bank, State Bank of India, Jio Financial Services, select banks that are actually hovering higher, but the market breadth largely is turning a bit weak. Let's see how this pans out in trade. Do stay tuned on to Business Today television as the market coverage continues on the other side. Earnings conversations will follow. In case you have questions about the stocks in your portfolio, ask them away on daily calls at 12 noon. That will come up with two market experts guiding you on your stock query. Stay tuned for that.
Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra. Together we rise.
India's economic architects, together on one powerful stage. From Nitin Gadkari to Arvind Panagaria and Montek Singh Ahluwalia. Visionaries who are shaping India's future. All debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook. Finance, roads, reforms. Disinvestment, nothing is off the table. The inside views, uncensored. Only at Adani Business Today, India at 100, 8th August 2025, Shangri-La Eros, New Delhi. India's economic architects, together on one powerful stage. From Nitin Gadkari to Arvind Panagaria and Montek Singh Ahluwalia. Visionaries who are shaping India's future. All debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook.